Hello and welcome to the first presentation in the Money Talk series. Those who would have seen the intro video would recall we did say we're going to cover four substantive areas. So today we're going to be talking about financial systems. So let's get started. Right on, financial systems. But before we get into that discussion, let's have a brief chat about systems in general. And from the diagram you're seeing there, you will recognize that systems come in three stages. There's the input, there's process, and then there's output. So in your experience, you'll find you have to make inputs, the system will do the processing, and also generate outputs which you can make use of. So when we're talking about what is a financial system, we'll be looking at the various components that make up the system, and then we'll also discuss the system as a whole. Then we move on to talk about why financial systems. We will explore the benefits of financial systems and how we can make use of those benefits. All right, let's take it away. Financial systems are comprised of what are described as modules, and those who are familiar with this would recognize revenue, uh, purchases, assets, liabilities, and those are the main modules. So, but in between those, there are some other modules, but we won't get into all of that discussion. And this is a basic and elementary discussion. But I'll just give you some examples. So, if you look at revenue, sales comes under revenue, and if you were to see the diagram there, you recognize that the inputs to that part of the system would be invoices and receipts. In the case of purchases, expenses come under purchases, and examples of source documents are vouchers and bills. So those are some of the source documents you will use to input into a purchases and expenses system. In the case of assets, assets will cover your fixed and movable assets, your debtors, your inventory, your cash, and bank. Cash and bank more or less the same. And for fixed assets, look at the diagram there, will show fixed and movable assets. You have buildings and examples, buildings and motor vehicles. Debtors and creditors we'll deal with shortly. Then there's inventory. Inventory would be the stock, your trading stock, or if you buy items for use in the production system, they'll be treated as inventory. And as you can see there, it would appear as if there is a system monitoring the inventory. But the thing is, inventory can on its own stand as a separate module. Then you look at cash and bank. Here again, you need to be able to monitor and manage your cash and bank, and there's a separate submodule for this kind of activity. In the case of liabilities, we're looking at loans, we're looking at creditors, and also capital. And for loans, we have a bias for banks. So um, your source of funding, um, while there are so many other sources of funding, our bias is to the banks. And so the diagram there will show a bank which represents the loans and capital part of your systems. And then, of course, there's the general ledger. The general ledger is the one module which brings all the other modules together. So all the other modules feed into the general ledger, and that is what generates reports for you later on. But we'll come to that later. As you can see from the diagram, the general ledger is at the center, and all the other modules, assets, liabilities, purchases, sales, they are feeding into the general ledger. Right, so we'll move on to look at another module and then take it from there. Moving on. You would recall in the intro video we talked about, or we mentioned money, talking about future prospects. And this is where financial planning comes in. And there's a module that deals with that, a planning module or a budget module. So it gives you the capability, the system gives you capability to make inputs into it and generate reports, which allows you to see your results down the road. Of course, it all depends on what you put into it. Um, But it's very important for you to know that such a module does exist and you can make very good use of it, so that you know what your future results are like. You can tinker with it, do some scenario planning with it so that it generates different results depending on what the level of inputs you pass through the system. Right. So let's look at the system's output, the financial system outputs. And generally, financial system output comes in the forms of reports. And then there are three main reports: income statement, balance sheet, and cash flow statement. But even before we go there, if you could recall, in the previous slide, we talked about submodules. Even those submodules can generate reports for us. For example, the sales report. Sales report can give us things like the value of sales, the quantity of sales, price you're using, discounts you're giving, um, your customers. So you have a set of information that can be coming and useful from that sales module. Similarly with purchases, what you're buying, who you're buying from, what you're paying for it, discounts you're receiving. So that allows you to make decisions, or to track your purchases and also make decisions going forward on it. Your debtors and creditors, in instances where you're dealing with credit sales and credit purchases. So it's like, those four at the top there: sales, purchases, debtors, creditors. They're interlinked with each other and provide information. Debtors can give you a database of all your debtors, in fact, of all your customers. Similarly, the creditors can give you a database of all your clients. Right, then we come to inventory. It's very important for you to know your inventory, whether you're using inventory for the purpose of trading or for the purpose of putting into a manufacturing process. The inventory report is going to give you things like the value of the inventory you have. It's going to give you things like your reorder levels, very important for a manufacturing process. So those are just two examples of some of the reports coming out of an inventory system. Assets important again for the purposes of, let's say, tax allowances, for the purposes of depreciation. So those are two pieces of information coming out of your asset module. The distribution of your assets, where they're located, and so on. So there's a host of reports that can come out of an asset module that allows you to have information and make decisions. Liabilities, similarly, know what your liabilities stand, know what your long-term liabilities are, know what your short-term liabilities are, know who you're liable to. All right, so it's very important for you to have that kind of information, and it's available there. Right, so we come to the main reports, which are the income statement, balance sheet, and cash flow statements. Those are the three, or the suite of reports that come out that comprise the financial statements. Um, the thing is, what can we use these for? And if you check the diagram there, it tells you for growth, for managing and monitoring your growth, and also as a business health check. The three reports combined with each other, it tells you about profit, tells you about position, tells you about cash flows. And when you combine those three, it allows you to see your business growth, see your business health, and for you to take those decisions based on what you're seeing there. Right. So we deal with why financial systems. What benefits are there to be derived, if any at all, from financial systems? I think first of all we could look at being organized. Systems allow you to be organized. Systems allow you to have things in place which makes for the smooth transition from inputs to outputs, from raw data to information that allows you to make decisions. So it brings that quality to your operation. So very important for you to be organized. And as you can see from that little write up there, no business can be successful without being properly organized. Monitoring and control. I like to think of monitoring as somebody having an overview, somebody overlooking what's taking place. And in so doing, it allows you to absorb information with respect to what is taking place within your organization. Control, I like the analogy of control and motor vehicles. Ever so often you hear reports about accidents, the driver lost control. So what can result as, what can happen as a result of losing control? Accidents can happen, fatalities can take place, losses can take place, injury can happen, expenses can result. So there are a host of things, negative things that can result, from the inability to monitor and control. So it's very important that you have these two in place, and that the benefit of having them now comes with taking action from having information which may be saying to you, we're going off course. And that comes with taking corrective action. Once you recognize in your monitoring and control system that you're going offline, you will now be in a position to take corrective action. On the other hand, if in monitoring and control you realize that you are online, there's always room for improvement, always. So you can now take that to enhance your business. Right. So we have covered financial system. We looked at processes. We looked at inputs, processing, and outputs. We look at the composition of the system, and now we have looked at the benefits of having financial systems in place. Very important. So thanks for being here. Thanks for watching the video. Give us a thumbs up. Subscribe to the channel so you can be updated when we release the next presentation in the Money Talk series. So, thank you very much and goodbye.